All right, so Mark, looking at the futures right now, a bit muted. Over the last couple of days, we've seen, the markets kind of move higher on the idea that we're going to see some deals, the UK deal or the framework of a deal with the UK seeming to boost the markets. Why do you think we're seeing such muted action in the pre-market right now when we're on the precipice of these China trade talks? And also, we had the president yesterday say, once again, buy stocks, similar to what he did right before the tariff pause.
Well, we've had a very strong run in the U.S. off the lows on the idea that there would be trade deals. I think you could say there might be a little bit of disappointment that the U.K. deal is the first one done, because in some ways it was the easiest, given that there weren't as many issues in terms of manufacturing as maybe with some other countries. And it shows that while we've had a rebound in the U.S., there's a lot of wood to chop to get these tariffs down further. We are looking at what's going to happen in China, and we think it's still an opportunity to look at some other markets outside of the United States.
Yeah, to your point, Josh Brown was on our air yesterday saying, kind of sarcastically, it's amazing that the U.S. managed to broker a trade deal with one of its longest allies of all time. I want to talk about the Fed very quickly. Your forecast is for 100 basis points of cuts starting in September. What happens in between now and then that leads to 100 basis points of cuts, and why so late? Just yesterday, we had Goldman Sachs come out with their forecast. It was 75 basis points, but they had it starting in July.
Well, I think it's been the strength of the jobs market that is pushing it back. But the reason we see cuts is because we think inflation will come down, and we will see some impact from these tariffs coming through in the labor markets, and that's going to give the Fed the room, but also the impetus to do some cuts.
All right, so it's interesting. You see inflation coming down later, even though we're going to continue to see the impact of the tariffs. That's pretty interesting. With that in mind, what sectors are you seeing as opportunity or seeing opportunities in, at least right now, for the near term until we get to that point of the Fed cutting rates?
Yeah, and just on the Fed rate cutting, I mean, I think that once they see more of the impact of the tariffs, they'll be able to say things like, well, we've had this one-off impact, but the longer-term trend is better. In terms of sectors, I think we're still looking at AI-related stocks, chips, not just in the United States, but also in Taiwan, and also the China tech sector, where we expect the CapEx to increase dramatically around AI.